Hello traders. I'm going to start to do some weekly recaps just so you can see kind of what I'm looking at. We'll get into some possible setups, charts. We'll look at the bond yields and we'll look at the metals market as well because that's been quite an interesting one. So last week we saw the Australian dollar and the Kiwi dollar still outperform. Although the Australian dollar is starting to pull back, we do have a monetary statement next week. They're looking to increase rates. We'll look at the news. So that is the driver really behind the strength in the Australian dollar. The US dollar, as you know, crashed, but it is starting to recover. Velocity is increasing back on the bullish side. So we'll look at some possible setups for that. And the European currencies they remain good shorts, but for the shorter term. There's not really many long-term play right now, but we'll look at the euro as well because that's on the radar. So if we take a look at the news coming up, as you know, so next week, last week we had the FOMC, as you know, but the market wasn't really volatile to that news. It was more volatile to the metals market. And we have this week the RBA looking to increase rates. So again, the market's already priced this in. And we have the ECB and we have the Bank of England looking to remain, the rates will be the same. So let's get into the charts and some possible setups. So let's just get into this here. This is the dollar. And we're going to take the first look at the weekly chart of the dollar. So as you can see here, we are on this multi-year support here. This goes back to 2022, 2023 levels. And on the weekly chart here, this is a nice close for the week in terms of a reversal for the dollar. And if we look at the daily chart here, we have a nice bullish engulfing candle here. So the question is why this happened? Well, there was a lot of talks in regards to the Japanese intervention, and a lot of people thought that the dollar was being shorted in to support the yen. Now, US have come out and said that this was not the case. So therefore, what we probably will see this week is the buyers returning to the dollar. And therefore, we want to be on the right side of the trade to make some money. So we can see here that the 13 EMA on the 4 hour is starting to slow back upwards. So look at this. If you were below this 13 EMA since Monday, the 19th of July, you could have been short dollar, and that's a massive that's 4% in the dollar. So that's a massive drop. So we've got a long run to the upside. So the dollar is definitely something that you need to keep an eye on. Next, we're going to look at the Japanese yen. Now, obviously, with the talks of the intervention here, we see we got a nice 3-day rally here, but it failed. It failed at the 50-day period moving average. The seller stepped back in. So the question is now, what are we going to see here? Well, we don't know. Are we going to see a further continuation to the downside? Now, the yen has been in free fall. This is kind of the first market update I've done. So let me just briefly talk about the yen. But since what's this, May, the yen has just been in free fall. And if you look at here, if you were short of the yen here since the end of last year, October time, we've been below the 50-day period moving average for months. And it's over a long-term trade, the yen has been a great trade, especially compared to the dollar. Back in October time, that was a good trade. So the question is, are we going to see a continuation here now? There's already talks of intervention. But again, my advice to you is trade the market in front of you. The yen is dropping, so don't try and go long yen. It's also been very volatile with the equities market because it is highly correlated. So again, when is the right time to get into a yen short? Well, we don't know. I think right now, if it was me, we just need to see what happens early next week because it has been so volatile. I mean, look at this. Look at this. It's not got a clear direction. It gapped up with all this news. There is no clear direction here. It is velocity sloping to the downside. RSI trend is now starting to go down. It could be a good short, but you would need to be cautious going into next week because we don't want to get stopped out on volatility. So now we're going to look at the euro. Now, the euro here, we had the 20 and the 50-day crossover. So it's a bearish sign. And now we're actually starting to see the 20 and the 50 period moving average on the daily sloping down. So really, you could give the euro like a -3 right now. I mean, there's a lot of selling pressure here. But the question is, if we look at the euro from a 4-hour chart here, we're in a range here. So do I want to be going short euro right now? No, not ideally. What I would like to see is I would like to see a retracement, and I would like to get a nice entry here if I was looking to play euro short against a pair. So that's what I would be looking for in the euro. Just keep it in mind, it's in a range. We need to see what happens here and then play the trade accordingly. So if we now actually start to look at the pound is also, again, the pound is below the 50 and it's below the 20. Do I like this trade? No, I don't because there's much cleaner pairs out there. Do you want to be risking your capital on this kind of price action? Not really, not really. I mean, look at this. We are in a range here, we're basing. Are we going to break out of this and have a continuation to the downside? I don't know. Depends. You have to answer the question is how long do you want to hold the trade for? Because that is very important. If you want to be in a trade for a longer term, for example, if you have a full-time job and you can't trade on a 15-minute chart, and you're trading on a 1 hour or a 4 hour, is the pound something that you're going to be looking at? No, it's absolutely not. There's much better currencies out there. Next, we're going to look at the Swiss franc. Now, the Swiss franc acts as a safe haven, as you know. And during all the intervention talks, the Swiss franc was a good long because the dollar was being shorted, so the money was flowing into the Swiss franc and out of the dollar. But then we quickly gave up all of our gains. Now, I posted this on the Discord, so you could see the percentage difference between one day and the other. But the question is with the Swiss franc is without that kind of play in these talks, do you want to be playing the Swiss franc? Probably not. The moving averages are going sideways. There is no clear direction. We are also at all-time highs. So there is also talks about intervention in the Swiss franc, and we will see what the next monetary statement is from the Swiss franc, because I know that there's going to be talks about this. So the Swiss franc, I would probably be avoiding it this week. There is no, unless there's any more volatile news, just remember that the Swiss franc acts as a safe haven. So when there is issues in the equity market or anything worldwide, macroeconomics, look at the Greenland, the money flows into the Swiss franc. But long and behold, the day after, it all comes back out. So just bear that in mind if you are planning to trade this currency. Okay, next, we've got the CAD. Now, this is something I will be keeping an eye on this week. So this is the Canadian dollar from a daily chart. So as you can see here, it's in a downtrend. We had the 20 and the 50 period crossover. We're below the 20 and the 50-day moving average. This is clear that the money is flowing out of the Canadian dollar. Now, what do we see here? We saw a nice 2-day, potentially 3-day, but the seller stepped in right on the 20. So that is a good sign of weakness. So the question is this going to continue to the downside? That is, as a trader, that is your job to determine. Your job is to trade with the right side of the trend. So right now, money is flowing out of the Canadian dollar. So do I want to get an entry at the top here and short into? Absolutely. What to pair it with? Well, that's what we're going to take a look at in some of the charts. But right here, right now, money is flowing out of the Canadian dollar and it is looking like a good short. Next, we'll get onto the Australian dollar. So as you can see here, now the Australian dollar has been good. Obviously, as we know, we've got the monetary statement from the RBA next week, and they're looking to increase rates. So that is why, as you'll see here, the market has been pricing this in. It's been bullish. It's been bullish for months. Now, what did we see? What did we have? We had a bit of a pullback here. So the question is now, how long is this pullback going to go for? If you look at back on the daily chart, we're still quite far away from the moving averages. So ideally, do I want to be? I'm not going to be buying the Australian dollar right now. I'll probably wait until we have some news from the RBA statement, and then I'll be looking for the next buying opportunity to continue to the upside. The Australian dollar has been a great currency, providing you've been trading it long. So next, we will also have a look at the New Zealand dollar, because the New Zealand dollar is an interesting one. For the last year, we have saw nothing but a downtrend in the New Zealand dollar, and now we are starting to see the reversal. So for the last kind of week, it's been phenomenal. If you got long Kiwi dollar, you could still be in that trade. So this is something to bear in mind of, especially the divergence now between the Aussie and the Kiwi, because the Aussie is massively overbought and the Kiwi has been massively oversold. So you need to let's have a look at the chart between the Aussie and Kiwi, because there's definitely opportunities there for a longer term trade, if that is something that you're looking to do. So let's get into some possible setups here. The first chart we're going to have a look at is the dollar yen. Now the daily chart, this doesn't really look that good. But this is where, if we come down to a 4-hour or even a 1 hour, this is where the best reversal patterns can take place. Now, really, what we need to see here is we need to see kind of a break above this previous resistance here. We might get a pullback and a continuation to the upside, but really, until we can break this, then I'm not going to go long. I really need for it to break above that. And then once we are there, I mean, look at the percentage difference. It's 2.3% back up to its previous levels. Now, how long will that take? We don't know. We don't know how long that'll take. That was a steep fall here. So it just depends on the money flow back into the dollar and the money flow out back of the yen. Really, remember, you're looking at two currencies here, not just one pair. This is where a lot of traders miss. So yeah, this is definitely going to be on the top of my radar, purely based on the percentage gain between here and here. That's massive. You will be able to buy into this pair, this pair, maybe three, maybe four times, which means you will result in a large position. So this could be a good opportunity, and definitely one to keep an eye on. So next we're going to look at dollar CAD. Now dollar CAD, I want to show you from a weekly perspective here, is that we did have this support level here. We can see that the buyers have stepped back in now here. Now the reason I like this trade is, again, it's a similar trade to the dollar yen. Is that we kind of broke below here. Now are we going to see a recovery here? Because if we do, we have another 2.5% back up to its previous high. So this is where this divergence between dollar and CAD. As we know, looking at the baskets, the dollar is underperforming. The CAD is underperforming, and the dollar is we're seeing a nice reversal pattern. Therefore, when you have a trade like this, it could make a good continuation to the upside. You also want to be looking at other things like USD, Swiss franc. This, as you can see here, the price has been in a range. So we broke out of that range. Now, was this good price action to trade in? Trade in? No. But again, with the divergence and with the Swiss franc being an all-time high and the dollar now recovering, we could have another larger continuation back up to even the top of this range, which is 4.5%. So this is kind of the trades that you want to be looking at, because ultimately, when you get an opportunity like this, it's presented. We had a really sharp drop on the dollar. It could be a slow climb back, but that's fine because that gives us good opportunities to buy into. What you want to be looking at is buying into pullbacks, bases. Wait till it's consolidated. Wait till that energy builds up and then get position on the breakout. You'll be able to maybe add into positions 2, 3, 4 times, and that's where the money is made in trading. Trading isn't made about on one position. It's about on getting the right position and building it to something that is worthwhile. Not just for the day, but it could be for the month. Last one that we're going to look at is just typical Euro USD here, because if you notice here, since this is a multi-month kind of resistance level here that we did break out of, and now we're starting to see a retracement back into it. So the question is here is, if we can get to the bottom or back of this range somewhere around here, again, that's another 2.5% drop. That's a good, again, it's another good opportunity. The dollar is strengthening. The European currencies are becoming weak. Pound is rolling over. Swiss franc is flat. Euro is also on a downtrend. So this is areas where when you have a strong currency like the dollar, that could potentially have a large reversal, you really want to position yourself perhaps even across. Get into one position, cover that position, and then take a look. If you still like the dollar long, for example, look at another pair and get into it. Therefore, you're also diversifying without risking initial risk. Trade your plan. You should have a fixed risk of how much you should be able to trade in your plan. And again, there's plenty of opportunities this week. So this was really just a quick, again, it's my first live kind of recap here. I will get better at them. Reach out if there's any questions. Trade, don't just trade. Okay, I would say don't just trade Euro USD because a lot of people do, but this week could be a good week for that. Trade relative strength and weakness. I've kind of explained what is weak, what is growing stronger, and you need to trade around that because, again, that's where you're going to get your highest percentage difference. That's where the money is going to be made, not just on one trade, but building a trade. So I hope you like this. Reach out if there's any questions.